Good afternoon and welcome to the FX Daily Roundup. Today is FOMC day, and I don't know if you saw the message note. Just be aware that our FOMC decision comes in earlier today. For those that are on the European time zone, so bear with me one moment. So I'm in Texas, you know my time, local time, it says is based on central time zone. So that being said, you can see it's going to be 1 p.m. Now, right now it's 11:30 p.m. Central Standard Time, so it's 90 minutes away. So those of y'all that are in Europe, obviously there's a differentiation between the time that we take the daylight savings time. For us here in the States, I believe it's going to be this weekend. So once again, just so that we're all aware, in 90 minutes, we'll have the FOMC decision. So someone just happens to look at the screen like, what the heck happened? So we don't want to catch anybody with the pants down, so bear with us. So let's go and move this here. We've already seen a pretty decent little move here with the euro. Let's go and move into that. Now, we did the bias chart resistance, obviously the bias chart like we do, every day here on ForexAnalytix in the European crossover webinar. Like I said, you may want to consider taking advantage of a 10-day trial offer with ForexAnalytix. It's $1. You have access to not only the chat room, but all the different analysis, whether it be macro, harmonics, Elliott wave, basic technical. But that being said, let me go on and move into the bias chart. We actually put the bias chart together in the European crossover webinar, which takes place at 4 a.m. Eastern. If you're not available then, Stelios makes that, has a recording that's available about 90 minutes before the New York Open. And even then, you could still just get the link in the chat room and be able to access that, to watch it. So here we are today. We had our resistance, which was, I believe, was from yesterday also, which is this 11:30. Now, we've done really well as far as holding this pullback. You can see yesterday we pulled back almost close, actually touching the previous support, but almost to this 1065, the 38%. That's actually going to be our support today. Now, if you'll notice here, the parameters are a bit wider than we normally are because, once again, this is set up for day trading / scalping. Not everybody in the room is a day trader or scalper, but a lot of them use the bias chart to coordinate with their own entries or exits, basically just trying to fine-tune entries. Not that I'm any better than anybody, probably not. That's because my focus is primarily on just scalping. But they do go in and coordinate that, and that's how we kind of once again, the great thing about ForexAnalytix is there's a plethora of traders in there. Plethora in the sense that all different tradings, outlooks, whether it's going to be for a couple of weeks, a few days, scalping, just day trading. So we're all able to go in and combine and basically Dale likes to say knowledge gathering or knowledge sharing is what it's like here in ForexAnalytix. So we're able to go in and share levels that we come in. I've been trading a lot of crude oil and some gold. I haven't done too much with FX, but we are starting to kind of lighten up, not lighten up, but, lighten up as far as a Christmas tree, as far as volatility, starting to see a little bit of that. So, but like I said, I go in and exchange levels with a DK trader who trades a lot of crude. He trades also FX, but I mean, we're able to go. The great thing about the chat room, I don't want to continually stay on this thing, but that's what it's helpful because you're in a community of other traders. Everybody might have different disciplines, but we're all in the same, trying to manage our risk and trying to make the most we can out of the markets. But anyway, that being said, you'll see that these parameters are a bit wider here to encompass what may be potential volatility with the FOMC decision, which once again, just to reiterate for anybody that's coming in now, and they may be in Europe because of the time change, and we haven't had it yet here in the States, it's going to be in 90 minutes. Well, a little bit less than 90 minutes, we'll have the FOMC. So just so you're aware, we'll have to look at your screen and say, what the heck just happened? At least now you know. So anyway, the resistance is going to be 1030. Now we're looking at 1060, and you'll see here. Now the 1060 is coming in right about there. If we see it actually on a 2-hour chart, you can see it a bit closer. We could come up to almost 1170. Well, to me, the key thing is I think we're going to dance around. Is the rate decision is pretty much all priced in. Supposedly what the market's looking for is the outlook. And so if the outlook is, and that was a thought about a week ago, was the Fed was going to give us, which I don't know how you can call that, quote unquote, a hawkish outlook, but supposedly they're going to cut rates and then have a hawkish outlook. So if that's the case, then we could come under some pressure. So I think that the ranges, although we've expanded it here, they may be a little bit tighter. So I think on this first run up, and we'll take a look here on the 2-hour chart, that's my my preference for a medium term chart. I don't look at the 4-hour charts. I do when I'm looking at bonds, but you can see the significance of 1160. You see that here? Now, to get back to the bias chart, let me pull that up. You'll see a little bit of difference here. I've got an asterisk here. Now, the asterisk isn't because it's important. Whenever I do an asterisk, it means that that's a key daily close level. So 1130 has been the resistance, but to me is, and we did the analysis, once again, I do the Asian analysis, basic technical analysis, and the Asian basic technical analysis for last evening coming into today, said the euro's managed to close above 111, which was key yesterday. Resistance on FOMC day is 1160 with 1130 key for the bulls to overcome on a daily close. If we get a daily close above 1130, then that opens the door for a further move to the upside, just from a technical standpoint. That's it. And I've already referenced that several times in regards to the peso and how I've been really bearish or dogging that pair. You'd have thought that I had a trade or that I was talking my book, and it wasn't. I was just looking straight up at the technicals and looking at it from a perspective if I was a bull. Like Blake likes to say, always put yourself in the other person's shoes. Well, I didn't even have a trade on. I haven't traded the peso in probably at least a month. But to me, it looked like that thing was going to hold. So when it rolled over, and I was, dogging it when it got under 20, was it 2144, whatever, got under 1944. That's it. It's over. It's done with. We're going lower. So my point being is that I'm just focusing on the technicals. Now I do take into consideration the fundamentals, and just to give a touch on what we do is each morning we'll also go over the economic reports that are out for the day. They kind of give us a flavor, and we do a couple of news stories off Reuters, kind of give us a flavor as to what we're looking for and what the market may be pressing up against. But like I said, at the end of the day, it's all about technicals. And so if we can get a daily close above 1130, that'll be huge for the euro. Going back here, we're going to go and take a look at the cable. With the cable, one moment, and my focus is really on the dollar pairs because obviously it's going to be the FOMC. So we had the opportunity to slide back at the beginning of the weekend. We didn't. Now we did come up here with a doji, but the difference is on the cable. We put on here, cable finished Tuesday with the doji. The bull bear fight takes place at 29.13. Well, the high for today was 29.05. So that 29.13 is still holding and actually has been our resistance since the beginning of the week. But we have opened the doors for a little bit slide. It says support widens to 27.43 for FOMC day. So we'd actually started Monday with support at 27.43, and we moved it up to 27.63 because the cable was really holding up very well. But that being said, and I think it will still continue to hold up well, but that being said, we have to widen those parameters, bear with me, widen those parameters for FOMC day. So we have dropped it back down to 27.43. Let's go on and get into the Aussie dollar. Okay, so the Aussie's just, it looks better. You would think it's like the thing is really starting to move, but then when you I don't want to say put it under a microscope, but when you put your eyes a little bit closer to the chart, you're like, what the heck? That hasn't even been much of a range. So our bias chart resistance is going to be 69.28, which that's really even kind of spreaded here. You can see I put that pink line there. Actually, when I was doing the bias chart analysis, basic technical analysis in Asia, because I do that every day, well, Monday through Thursday, I don't do it on Friday, but the basic technical analysis, looking out for the Asian session and further out. I actually had it even higher, but my thoughts this morning when we were going over it in the European crossover webinar was, hey, look, this is in a tight range. So if you look at it relatively speaking, even 69.44 might even be a bit of a a stretch here. So we've gone and put it here at 69.28, thinking that if they do get up there, you might even have some people take off some of their longs. Doesn't mean that it can't go higher. Really, we'd be looking at 69.44. But like I said, look at that first level of 69.28. If you're long, you might have some people peel off some of their longs. Or if you're waiting for 69.44, you might get left with nothing in your hand and then watch this thing start sliding back. And like, what the heck? I should have taken my profits. Not that it can't go higher, but the thought is that the rate cut has already been priced in. The thought is, what about the outlook? And the Fed's already cut these couple of times. And so I don't think they're going to say, because the economy is still holding up relatively okay, actually very well overall. So why are they going to go and say, oh, yeah, we still may need to cut? For one thing, that wouldn't look appropriate. But the other thing is the market might get a little spooked thinking, what the heck do you know that we don't know? And then we'll probably start seeing people clamoring about the old repo situation. And boy, there must be something the Fed knows that we don't know. So they probably, I'm not going to say necessarily it will be a hawkish cut, but I don't think it's going to suggest. They may say something like, at this point, they think it's appropriate to kind of hold their own, and they'll just see how things, play out, blah, 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 which could end up ultimately, like I said, you may see the buy the rumor, sell the fact. Well, let me put it this way, buy the announcement, as in, i.e. sell the dollar on the announcement, but then quickly the market may go and pare back. So just some thought there. On the downside for support, we have actually moved that a little bit lower, and that's going to be 67.72. Okay. Let's go on and move into the peso. Well, here's the one I've been talking about. And like I said, I haven't even traded this, but you'd have thought that I couldn't, that I was dogging this like nobody's business. But like I said, I was dogging it from a technical standpoint. I'm not going to spend too much time on it, but we all know we made this rally here. We held the 61% and looked like, okay, we'll dip down to 60, which actually dipped lower, and then we'll make a change or challenge back up here. And the market slipped. And once it got past 44, I said, over, done with, finito. This market's gone. It's going lower. Although I thought, once again, not to beat a dead horse, I thought we'd get a bounce from 23.6. We did, but it didn't even make it to 1930. So I said a daily close below this, opened the door to 1908, which we did get down there. And then I said our further secondary support, which is a bias chart support from yesterday, and actually from Monday, was 1902. And we made it down there, and we've seen a little bit of a rally. But don't get your rally hats all excited. This market's still a dog for the most part, technically speaking. So like I said, you think I had an axe to grind with it, but I'm just saying from a technical standpoint, and it's actually played that way. I guess I should have taken position myself, but I don't like to hold overnight. But you can see, obviously, that's been the appropriate way to go. If you just held, you got paid. That being said, widening out the parameters here. Resistance is 1916. I think we made up to about 19. Well, actually, we got above 20 just now. But our resistance is 1923.6, the breakout level. And on the downside, if the wheels fall off the caboose, we still have 1902. But if they do fall off the caboose, you'd be looking at 1892. I think it's a bit of a stretch. You could almost say 1898. But once again, whatever happens. Let's go and move into the dollar yen. One moment. And with the dollar yen, let me go and move into this quickly. So the Asian session analysis was the dollar yen remains on the bid ahead of the FOMC and BOJ. Key resistance will be the major pivot of 927. You can see that. I even mentioned yesterday, I think that pivot's been in place since Moses crossed the desert. But like I said, it's been in there for quite a while, since May of 2018, actually. Key resistance will be the major pivot of 927. A daily close above will open a challenge to 1050. There's a 1050. Obviously, we have BOJ, so be careful on this. But like I said, support will come in at 812. So we'll see how this whole thing plays out. We shall go on and see. Let's go on and move into the dollar index. Okay, the dollar index remains under pressure. Resistance on FOMC day will be 98.34, so I'm giving it a little bit of a benefit of the doubt. Remember, 97.89 is key, and the return rally, which was so feeble, all of 21 ticks, was 98.11. So I'm giving it a little bit just in case we see a big reaction. Remember, the market is thinking that everything's all priced in, and if we do see the Fed basically say, hey, you know, we're gonna take appropriate action, we're not doing anything, then you could see the market overreact a little bit. So if we get past 98.11, you can look for 98.34 to kind of keep this encapsulated, so to speak. Support is going to be 97.46, which we're not that far away, with additional support at 97.20. You can see it doesn't mean we can't take out 97.20, and we could make a run to this 97 even, but just laying out where the levels are, okay? And that's it. That's all we have here. We shall see how everything else goes and plays out. Oh, I'd be remiss if I didn't mention the dollar CAD. We did finally get above the dollar CAD, and boy, nice little run back here in the dollar CAD. Now, if we look on the 2-hour chart, let's see here. You can see here that, bear with me, we just crossed over the 38%. We've actually got some resistance coming in here at 31.85. You see that right there, 31.85, and the market is kind of paused just right before that. But we'll see. Like I said, once they get past the FOMC, we'll see if they could even stretch and try and, you know, punish any existing shorts. But the thing is remember, we've had that 30.43 as our bias chart support, and even though this market could not pick itself up, it was still holding there. We didn't break below that 30.43, and one of the guys in the chat room, actually, we mentioned it yesterday, he picked it up right there. I mean, right on, almost right there at the bottom. And so I think he ended up taking half of his position off at 30.88, and I think he was going to let the rest run. So we'll see how that plays out. But we'll see where we go. Obviously, we had Bank of Canada earlier today. Thoughts are that they could possibly cut eventually even more. I saw somewhere it says their finger's still on the trigger. But obviously, the thought is if the FOMC cuts or the Fed cuts, then the Canadian be yielding more. So we shall see how that all plays out. But good luck trading the FOMC. And remember, it's going to be in an hour and 15 minutes. An hour and 15 minutes for those of y'all in Europe, obviously affected by the time change. Thanks for joining us here, and have a great day.